Welcome to another episode of Real Financial Success. This is your host, Chris Gunnels, and this is where I teach you what I'm doing to gain financial independence. Hey guys, thanks for coming back to listen to another episode of Real Financial Success. Make sure you guys like and subscribe to the podcast and to my YouTube channel, which is youtube.com/realfinancialsuccess. Go ahead and comment on any videos on the podcast, share it with your friends, let everybody know about it. We're trying to educate the world on how to take care of their own finances and make money through options trading, through real estate investing, through creating businesses, and all the other opportunities. So I'm coming at you with another episode early this morning, January 12th, 2021. I haven't been posting my daily recaps because I've decided to just do maybe weekly or bi-weekly. Maybe even sometimes I'll do a couple times a week. And the reason for that is because I don't do a lot of trades every single day. I may put on a lot of contracts for each trade, but I don't necessarily put on a lot of trades. And so I don't feel like making an episode every day about one or two trades. Instead, I'm going to do a weekly podcast or a weekly YouTube video that highlights all the different trades for that week. So getting right into it, my last episode was January 4th, and so I want to go through January 5th to January 11th. The first trade that I have to talk about is ExxonMobil. I did a naked short put. The original expiration date was February 19th, and I was able to close that out. Well, let me take a step back. I opened that trade on December 21st for February 19th expiration. I closed that out January 5th for 50% profit. That profit was $66.67. That includes commissions. The next trade was, again, a naked short put in Walgreens WBA. I started that, or I opened that position December 12th, 2020. I closed it January 6th, 2021 for, again, another 50% profit, $77.67 per contract. That was the February 19th, 37.5 put. I did a poor man's covered call in PBCT, and I opened that trade. Let's see. I opened that December 30th, and I felt at the time that it was poised. I talked about it in a previous podcast that it was poised to go up because it had a large downturn. And so what I ended up doing was I sold the February 19th 15 call, and then I bought the May 21st 10 strike call. I ended up being able to close that out for, I believe my max risk was $295. I closed it out for $112 minus the 22, so $90 profit. So whatever percentage that is, that was another profitable trade. It's called the poor man's covered call. It's not my normal trade, but I decided to go ahead and give it a shot, and it ended up working out. All right, so the next one was Ben, BEN. I sold a naked put in that, multiple contracts. And let's see, it was the February 19th, 22.5 put. I sold on January 5th, and I sold 3 contracts. The very next day, I was able to close 2 of those contracts for 25% and 35%. And then I held out another contract for 50% profit. On January 7th, I was able to close that last contract out for a 50% gain. Let me see, taking a step back, I sold the contracts for 55-cent credit on each, so $55 each, or 165 net credit for all 3 contracts. And in a day, I could have closed them all out, but we'll call it a day and a half. I was able to make 25 to 50% profit on all those contracts. Okay, so another Walgreens trade, WBA is the ticker. Let's see, what did I do? I sold originally I sold the January 15th 40 put on December 9th of 2020. It looks like it was in the money, so I bought that back, and then on December 22nd, and at the same time of buying that back, I rolled it out in time. I rolled that January 15th 40 strike price put option out to February, gaining an additional credit, and then I was able to close the entire position out for a 50% profit on January 7th. That 50% profit equals $124.34. That includes commissions, and I did that. It took about a month to finish that trade, but take 30 days for 50% profit. I'll do that all day. Okay, and the last one that I have to talk about is MMP. That's Mary Paul is the ticker. Let's see, what did I ended up doing first? I sold the January 15th 42.5 put for 65-cent credit for each contract. I did that on December 16th 2020. And then it looks like it was in the money. And so what I ended up doing on December 31st, I rolled that out till February 19th expiration for an additional credit. And on January 11th, so yesterday, I was able to close that out for 50% profit. And that 50% profit is $104.34. Okay, so that was all the closed positions. Let's go ahead and talk about the openings, the open positions that I opened this last week. The first one is in Consolidated Edison. I already had a naked put in that one for February 19th, the 67.5 put. But what I ended up doing was it's been coming down the last few days. So I decided to go ahead and sell another put option for February 19th. It's the 62.5 strike put. I did that yesterday, January 11th. I did that for a 55-cent credit. So all in all, I have two short options there, short put options for a credit of $2, actually, $2 even. All right, so my next position is in Coca-Cola. I sold a put option there, February 19th expiration, 50 strike price. I did that January 6th, and I did that for $1.32 credit. It's gone in the money and it's gone out of the money. It keeps going back and forth. Basically, Coca-Cola is hovering around the 50 strike right now. We'll see what happens. We still have 37 days till expiration, quite a long time. So we're not going to really mess with that unless it drops a few more dollars. If it does drop a few more dollars, what I plan on doing is rolling that out in time, maybe even selling an additional put at a further lower strike. Okay, so my next opening was in LEG, LEG. That stands for Leggett and Platt. And I opened that January 8th. And I sold 3 contracts there, the 35 strike price, the put option. And I did that for 30 cents per option contract for a total credit of $90. And I don't see anything going on with that one. Again, that was the 35 strike. I'm looking at the price right now, or the last. It was yesterday. It closed at 43.88. It looks like. So we're about $8 or so, $9 away from our strike. So that's at the moment looking pretty good. No adjustments here right now. All right, so the next one was I actually bought some more stock in 3M. What I'm trying to do is slowly gain a large position in 3M. The problem with that is it's a pretty expensive stock, so I'm buying a couple shares here and there. And so the reason why I'm trying to gain a large position is so that I can sell some calls and gain the dividends for that stock. It's a pretty good stock. They've been around forever. They sell all kinds of different things. and they're good in a down market and in a recession and in the booms as well. So just trying to get a leg up on 3M and build my portfolio out, kind of diversify a little bit. Instead of just selling puts, I want to actually buy some stock and gain some dividends. Okay, so the next opening position was in MO. That's Mary October. That's the Altria Group, I think is how you say it. Anyway, I sold another put option there. And I did that January 7th. It was the January 29th 40 strike price call. So what I ended up doing was I actually rolled this position out. The original position was for January 15th expiration. But on the 7th, I believe it was in the money, not by much, but by a little bit. And so, and the expiration was coming up in 7 days. Give or take 7-8 days. And so I ended up making that decision to roll it out. Since it wasn't too far in the money, I was able to gain a good credit. I think it was about a 90-cent credit or something like that. But anyway, the stock has rallied a little bit, so that's good for me. And I'm looking to close that out this week for 50% profit. I'm not sure. It just depends on how much that stock rallies. Right now, I think it closed at 41.35. That's what it looks like in Thinkorswim. But we'll see. I have 16 days till expiration. If it goes in the money, I'll roll it out again for an additional credit. But at the moment, I'm hoping to. I already have stock. I already own stock in this underlying. So I don't necessarily need to own more. I will, because it's a great company. They've been paying dividends. I don't think I checked earlier this morning on Dividend Investor. They have not missed a year of dividends for the last 20 years or so. So it's a great stock. So what that tells me is that they're good in recessions and in booms. When the 08, 09 recession, they were still able to pay dividends. Through coronavirus, they're still able to pay dividends. So good stock. If I do have to own it, that's fine. But again, I'm looking for monthly cash flow. So I want to get out of this at 50%, but it's not that big a deal if I have to own another 100 shares or so. All right, the next opening was in PBCT. I did that on January 8th. PBCT is the People's United Financial Incorporation. Again, another great stock. If you go and look up their history, the dividends are great. I mean, they don't pay out a lot because it's a really cheap underlying. I mean, but for the price of the stock, they pay like 30 cents or so per quarter per share, which is, I think that's really good. You can see some companies out there, that the underlying costs $100 and they're paying you 20 cents per share. So it's for your value, for the value, I think is a great stock. All I did was sold a naked put, and that was the February 19th 13 strike put. It rallied a lot the last week or two. And so the only really good option there for me was to sell the 13 strike. I wanted to sell the 12 strike, but it wasn't really available at a good price, or at least what I felt was a good price. So I ended up selling the 13. And I sold actually 3 contracts for 35 cents each for a total credit of $105 for those 3 contracts. Again, looking to get out of this at 50%. But if I'm not able to, and I get put the stock, that's fine. It's a great stock to own. Okay, and the last one here was actually AT&T. Looks like I opened one. I actually closed it on January 6th. I'm not sure if I mentioned that yet in the closed section, but I actually closed. I had two put options for January 29th expiration, the 28 put. I ended up closing one of those for a 29-cent debit, which basically I opened it for 59 cents, so gained 30 cents, if my math is right there, 30 cents per share, or basically $30 on that specific trade in about 2 weeks or so. So about 50% winner on that one. I still have an open position in AT&T for January 29th expiration, and I'll look to close that out here shortly. I actually sold that for 80-cent credit, so I'm looking to close it out for about 30 to 40 cents. All right, well, that's basically it. If you guys have any questions, make sure to hit me up at anchor.fm/realfinancialsuccess/message. I'd be happy to hear from you guys and answer any questions that you have. If you'd like to support my work and help me continue to bring you content for your financial success, consider donating at anchor.fm/realfinancialsuccess/. If you're listening on the podcast, make sure you head over to my YouTube channel so you can get an actual visual representation of what I'm talking about on each of these episodes. And if you're watching this on YouTube, please make sure to hit that like button, subscribe, and to share this on your Facebook, on Twitter, on any of your social platforms. That would be very helpful to me. It also encourages me to keep spending my time to create these videos and to hopefully teach you and help you also become profitable in the market. Also, it helps YouTube's algorithm. Basically, it lets them know that what we're doing here is valuable to you, and it could potentially be valuable to others. All right, guys, that's it from me today. I appreciate you guys watching and listening. I hope you have a good one. Love you. See you next time. Bye.